All right, what's good, everyone? I lost, I think, like $300, which kind of sucks because I had my stop set at 12 points, which would have been 240. But this giant Drake candle just like the slippage just gave me 300, which kind of sucks. But I mean, it's whatever. You gotta roll with the punches. I'm not mad about one loss. It was a small loss. Normally, I risk $500 per trade, but I trimmed my stop. My stop was originally up here. I trimmed it because we broke through this low here, so I trimmed it to the fair value gap. Ended up just completely blowing through me. Um, so obviously I lost a trade, so I'm gonna just explain the things I did wrong and how you can avoid them because obviously if you're watching this, you're trying to learn how to do the right things, and I didn't do the right thing today. So there's nothing to really tell you guys that I did anything right. So still on the 4 hour, we are printing bullish structure, right? We are creating higher highs. Yeah, we had a one lower low, but this isn't like a 4 hour market structure shift. This is a liquidity sweep, in my opinion, off this 4 hour low. Only reason I was open to shorts is because we did sweep out a high time frame buy side liquidity all the way over here. But maybe that's just, yeah, we swept it just a sweep sell side, and now we're just going to continue bullishly. So I probably read that wrong. I also have to remember we are trading in this 1 hour for value gap. We are respecting it very beautifully. If we wanted to go lower, we would be overturning it. So going into the day, I had this high marked out. Oh wait, I don't even have it marked out right now. I had London high, which is right here. So if you're having a problem trying to find where liquidity is in the market, because that's the first step of the model that I trade, you have to know where liquidity is. That's where the market's going to want to go. It's above highs and below lows on notable time frame. Obviously, you know, this isn't liquidity. This isn't liquidity. This isn't liquidity. Like this is not a liquidity sweep. This little high right here. That's just a high. It has to be like a notable high. Like this is some buy side liquidity. This high right here is buy side liquidity. It's a very like prominent high that it made in the market. This is like minor buy side because it's inside the overall range of one. And then you see here we swept this buy side liquidity out, and you see how we kind of trailed down into it. So normally when I try to find liquidity, I'm looking on 15-minute or 5-minute because that's where high time frame draws are. Those are the most probable draws. So you can see here, this is the London high and also the sessions. London high, London low is normally where you want to look, and then Asia, or where's Asia? Asia's like somewhere around here. So there really isn't an Asia high or Asia low. I mean, right here. Um, but London sessions highs and lows are good liquidity spots, and just prominent highs that you see in the market, like just very bold highs that you see here. This is pre-market. This is the news. This created great relative equal lows here. So this relative equal like lows or highs is good liquidity too because they're very equal. The market does not want to be equal; it wants to be jagged like this. Um, so going into what I thought, so I first obviously saw these are relative equal lows, and they're very relative equal like highs or lows are very high draws. So you expect these to be taken out because the market wants to be made jagged. It doesn't want to be smooth. And so I thought we were going to come down to there at least. Also London low. We swept London high, so I thought we would have some sort of reversal. And for some reason, I thought we were just bearish because of this. But I had to just keep in my head that we are respecting a bullish gap, and on higher time frame, we are still bullish. So we're eventually going to want to go up. So on 5-minute, we pre-market swept the London high. I was like, all right, well now I need to reassess because we swept it pre-market, but we created another little high here that we could have ran again. So on market open, we just completely ripped up, took that high. And this is where I think I got wrong. We traded up, we trade down, respected a fair value gap. We traded up, we reswept all this liquidity, traded into another fair value gap, respected it, and then around the silver bullet 955 macro, we trade down very hard, small market structure shift. My model, liquidity sweep, market structure shift with displacement, retrace 50%. That's what it did. Fair value gap. That's what it did. Trade into it. I went short. I should have realized that right here we are respecting a 1 minute fair value gap. Yes, we did invalidate it a tiny bit right here. However, we respected it this entire time. I should not have went short here. until we invalidated it. However, yeah, we invalidated it here, so if I were to have gone short, I might have got what the heck? If I were to have gone short, it might have been at this tiny fair value gap, and I still would have gotten end up stopped out. So I just think overall, I just got the bias wrong. How also this is trading into this old fair value gap, which is still getting respected. So I just think I should have waited for these fair value gaps to get burned, and then took a short down to here, relative equal lows, this order block here holding price up. So that's what I think I could have done better. I think I just had a, like I said in the last video, weighing the confluences, right? I had an error here. There's two very big bullish gaps that have gotten respected. And the 1 hour fair value gap that's getting respected, that's holding price up. If that got burned through, yeah, shorts would have been free all the way down here because there's nothing else holding price up besides this, right? So I think my problem was I didn't weigh the confluences good enough. I knew those fair value gaps were there, but in my head I was like, well, I don't care, but you have to care, right? Because I got the setup. The setup was a very beautiful setup. It was really good displacement, but you have to understand that there's other confluences holding price up that wants it to go the other way. I also think I just got the daily bias wrong. I had an error in thinking it was going to go down, even though I had to make sure to look on higher time frame and understand we are respecting bullish PD raise. 4 hour looks bullish still. This is just a liquidity sweep. It's not a market structure shift. We're not going to turn down. And there's a lot of low resistance buy side liquidity up here. So I think that was my main problem. Like I said, it was a small loss. It was like a $300 loss as opposed to a $500 loss. So I'm not mad at all. I wouldn't even be mad if it was a $500 loss because that's how much I'm allowing myself to risk. And now look, we are pushing up. So I would not have caught any of these longs because we did not sweep at any sell side. Because this is market open, we just ripped up. So I also think that also could be a problem I have is when we trade up, we sweep out buy side. I'm like, okay, well, we're sweeping out buy side. We might reverse. I have to understand that just because we are sweep out buy side doesn't mean we're just automatically going to reverse because, like I said, if high time frame is bullish, sometimes we might not even sweep sell side. We're just going to rip if it really wants to move up, and that's what it did here. But as for finding liquidity, someone asked, just above highs and lows, above highs and below lows, London high, London low, Asia high, Asian low, just news highs, news lows, just prominent outskirt highs. Like, yeah, these are little liquidity points, but these are internal liquidity. If you want the daily draws, it's on the outside. Like, look on 15-minute, hourly time frame, and you'll see high. These are the notable highs that you want to get taken out. Relative equals are very important too. And just previous day highs, previous day lows are very important to look at too. So we'll be back tomorrow, Friday, full port Friday. I'm not going to be full porting, but hopefully we can maybe make back this loss. Definitely, if I win a trade, I'm making back this loss times like 30. But yeah, not mad about this loss. I just have to understand, weigh the confluences. Like I said in my last video, I got to take my own advice. It's a hard thing to do. It's a very hard thing to do because, when you in the moment when you see this. In the moment when you see this, you think shorts are free, right? Yeah, you see this respectively fair value gap, but this much displacement, market structure shift, you think we're just selling off right away. It's hard to not FOMO in too when you see that, and you really just gotta analyze the situation when you see a candle like that and just see, okay, what's holding price up, what's holding price down, and you gotta just understand you should not want to be taking a trade. I don't want to go in these markets take a trade because the market's designed to beat you. You're like, that's the whole thing. You shouldn't be wanting to trade. Yeah, you want to make money, you want to trade the market, but you shouldn't be wanting to be like, I need to take this trade. No, if it gives you the setup, I will capitalize on it, but you don't want to take this trade. So just something to think about there. I need to be better, taking my own advice, obviously, but other than that, I think I did decent. I obviously have mistakes, but I'll be back tomorrow. Follow my TikTok, join the Discord. I'll link both of them in the bottom. Yeah.